This podcast is brought to you by the award-winning prop firm, Fidelcrest. Trading Night, episode 204.
Now, to understand why I do this, because if you were to look at like how our minds work, and it's kind of part of our psychology as well, right? So like when you are less mechanical, you have to make more decisions. Now, what happens when you're in the markets? You tend to be more emotional, and your decision making it tends to go down. So when you pair these two things together, it's essentially a disaster. When you're emotional, you have to make decisions, and they have an inversely correlated relationship. Like what I was saying, like when your emotions are up, your ability to make decisions tend to go down. So this will affect your trading as well if you're just trading 70 to 80% discretionary trading. But if let's say you're mechanical, you're emotional, but you still stick to your rules and you still replicate them, the effect on your trading is much lesser.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
And it looks like pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Up podcast. I'm your host, Cam Hawkins, and today we've got Brian Tang from Singapore on the show. Now, Brian, he was mentioned last week with our interview with Elise Amores. He came third in one of the competitions she ran, where she set some criteria around giving out funded accounts. And they were really, really strict criteria. So you had to do more than what you'd normally do on a funded account challenge. Brian came third in one of these competitions, won the funded account, and now he's in the process of getting to the point of being funded. But I got him on because I thought his story was quite interesting. He's very committed. He's a smart money concepts trader, but he has he has done the maths on smart money concepts in a way that I think is going to be quite useful for a lot of people. He's managed to increase the win rate and do something a bit more convenient for his emotional state when trading. So if you're a smart money trader, even if you're not, you're going to learn something from this interview. He also did Raja Banks' course and found that he became profitable after that. And you're going to find out how and why and how that happened in the show. And if you do resonate with what Brian is talking about, especially around the emotional side of things, and you're looking to get rid of some emotions from your trading, either all of them or some of them, then have a look at my Robot Builders Club. I teach you how to do it without having to learn how to code. There's no coding at all. It's all just drag and drop interface. If it's a little bit too much for you to start off with, take my free training. Do that first, then check it out. And if you are ready to join, there is a coupon code that you can hit me up for in the chat on the Robot Builders Club page. So go and check that out when you get a second. All right, folks, enough from me. Let's hear from my sponsor and get on with the interview. Oh, and before we do, I should say we did shoot a video which is really, really good and walks through exactly how Brian takes these trades and how he breaks down the price chart using his SMC stuff and all the other things that he talks about in today's show. So once again, let's hear from my sponsor and get on with it. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Fidelcrest apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. Righty-ho, folks, here we are on Trading Up. We've got Brian Tang in the house. Welcome to the show, Brian.
Hello, good morning. From Singapore.
All the way over there in Singapore, yes, in Singapore.
Yes.
So we haven't had a Singapore trader on for a long time, so I'm glad to get you on. And I know you're at the sort of early stages of your journey, but you have done enough to get yourself a role in a prop firm, a hedge fund. So your stats have done enough to get you in a hedge fund. We're going to hear a bit about your story today, how you got to where you are, and learn some lessons along the way, which I know a lot of guys are going to be finding really useful. So to start off, do you want to talk about how you got into trading and where you started?
Okay, so there's nothing really special about how I got into trading. Like just like everyone else, I was attracted to the concept of quick money, right? So this was back in the summer of 2019. I was like scrolling Instagram randomly, and then I saw this guy, and you'll be surprised. He was giving out signals, and then I clicked on it. I was wondering like what this was, and then he was like giving out euro dollar signals, and I remember winning a couple $1,000 just based on a $200 account, and I was like, this is something, isn't it? Because I remember back then I was like doing jobs at like banquets. I was like being a waiter, like, you know, lifting the plates for like $7 an hour. Yeah. And then that few $1,000, it just became so surreal to me. And then you'll be surprised. In about 2 months, I lost it all.
I'm not surprised. Go on, tell us how you did that.
Okay. So I was like looking at euro dollar, and then there was this joker on Baby Pips. He was talking about martingale strategy. It's basically how it works is when you lose a percent, you double down on risk. And I was so drawn into that without knowing like how it really works. So in like I think 10 to 20 trades on gold, yeah, you must be gold. I lost it all. And then fast forward to a few months later, I blew like 1 or 2 more accounts, but that wasn't too much. And then it was at about the end of, I would say in July or August of 2020, where I wanted to be serious. Like, I was like, okay, I can make money from this. Like I have to stop doing stupid shit. And because I was a student back then, and I mean, I did have savings, but it was getting low bit from like blowing this account. From that point, I wanted to get serious. So I looked around, I opened up YouTube, and then I looked up, there's like Forex traders and everything else. And then I stumbled upon this guy. Oh, this was the first ever course that I bought, but it wasn't the last. So there was this guy based in the UK called RockZFX. And then I watched a couple of videos of his. He was quite logical. I saw that he wasn't trying to like sell any signals, any fluff with that. And then I bought the course. I studied it religiously for about 30 days. And then I didn't really backtest it because I'm a person that don't really believe in backtesting. I believe that backtesting is only viable for the first stage of your strategy. Like for about because I read this book called Trading the Zone by Mark Douglas. He stated that sample size of 20 to 25 trades is enough for you to determine whether trade strategy is viable or not. I feel that backtesting is only viable beyond that stage. So like once you reach that sufficient sample size, it's more logical for you to go to the live account. So based on this logic, I quickly started a live account, and I was quite profitable for about 1 to 2 months using just like basic support resistance, nothing really fancy.
What was it? Now, what were you using? Sorry, you were using
support resistance.
Okay.
Like nothing really fancy, like your usual stuff. I was like looking at the 4 hour, looking at the 1 hour, looking at the 15 minutes, and that was doing the London Open. And I did that for about 2 to 3 months, and I was really doing well. And it was quite funny. I was only a year and a half, or less than 2 years, and I was like really, really confident, and I was like ready to go for funding. And then once 2021 hit, that year was hard for me. The first 3 or 4 months itself, I lost like 20% of the account. And then I was like, something isn't right. I have to do a review about this. And then that was when I looked at my strategy and everything, and I realized that there's something off with this. It's not that the strategy is wrong, but perhaps it is a problem with myself, and I'm not really too suited for this. And then by being very logical, I looked online, I looked at a few more courses. And then I stumbled upon this guy called Roger Banks, WicksDontLie. I'm sure you have heard about him.
Yes, he's been on the show. Yes.
Yes. And then I bought his course as well. I've been in there for about 2-3 months. And then, here's the fun fact. For now, I personally do not trade his strategy, but after his course, it made me profitable. Now, the thing is, that's very interesting, right? Yeah. So he trades price action as well, very similar to the first guy, just simple price action and everything. But the way he looked at the market made me realize that being consistent is very important, and being consistent, like what I previously mentioned, it's not just like any fancy word like all the gurus throw it out there. Like you have to be able to do it day in, day out. You have to come up with a process that you're able to replicate from, I would say, start of the month to end of the month. Every single day, no matter whether you trade or not, the things that you do have to be exactly the same, even your risk parameters. And one of the key quotes that Roger Banks used to say was 1 to 2 trades a day, 1 to 2% risk a day. That's one thing that I still stick to up to today. Now, fast forward to a few months, the strategy wasn't really working for me. And then I stumbled into my last and final mentorship. So I stumbled into Smart Money Concepts, SMC, into the community called Photon Trading FX. And then this time around, instead of spending just 1 month studying, I spent about 2 months studying because to be honest, this was a really pivotal moment of my trading career. This was in I would say start of the year. I was really having certain doubts about my career. I was like, I've been doing this for quite some time, and like other guys who have been doing this for the same amount of time, they are already profitable and everything. Like this is the point where if I really do not make it, like I'll have to do something else. Otherwise, it's not gonna work. So I spent that 2 months studying, and then I did a decent or minimum amount of backtesting, and then I did this thing called daily markups, just by recommended in the course itself. But I did a modified version of it. Basically, you do your market analysis every morning before London open, and then you store it in Notion, and then you do that for about 30 days. And then within that 30 days itself, you try to seek and recognize patterns that you can see in the market just by looking at what happened every single day at the same time. And then afterwards, I jumped into a live account, and then I've been trading the live account ever since. It's nothing big. It's like, I think $1,000. But the whole point of the live account is to adjust myself to the parameters of the prop firm. Because at the end of the day, the goal is to get funded by a prop firm. So for me to be a prop firm trader, I have to get used to the risk parameters. As you know, trading a prop firm is different from a personal account. Prop firm entails the daily drawdown of 5% and the overall drawdown about 10 to 12%, depending on which prop firm you decide to register yourself with. So yeah, that's the part on getting the trading. And currently, right now, I do Smart Money Concepts with a fix of my own. So yeah, I kind of like learned from all these mentors, and then I kind of crafted it into my own strategy. So it's like I've taken a few layers from this, and then now it's become mine. Yeah.
It's interesting because I read in your Twitter feed that you only do, because I mean most smart money concept traders are in there with sometimes a lower win rate than normal, below 50%, and doing much higher risk to reward trades like sort of
yes
5R plus. But I saw in your feed you only do 1 to 2R. Is that
yes.
right? Yeah, 2R trades.
Most smart money concept traders, they're gonna kill me for this, but I don't really care. Now the thing is, the thing about smart money concepts is, okay, this isn't really talked about. I really want to highlight this point. So how smart money concept works is usually they identify a certain area, usually a support resistance, and then they will zoom in on the 1 minute time frame, and then they'll be looking for entries. Now, before you see your 1:10 winners that most smart money concept traders post on Twitter, they usually go through about 2 to 3 losses before they get a winner. So if you look at the strike rate itself, it's about, I would say, 20 to 30%. As compared to me, I do that without refining. So I use my smart money concepts, and then I identify an area which most of you call support resistance. I mean, it's the same thing. I don't really care, so long as you're profitable, right? And then I just set a limit order based on the time frame without any refinements. So essentially, they are taking 2 to 3 trades for that one particular area, right? I'm only taking that one trade. So if you were to work the math out, because I have a way bigger stop loss as compared to them, if my one trade does work out, let's say I take 2 trades, and if one trade works out, it's a 50% win rate. But for the same 2 trades that I take, they may be taking 6 trades and they only win 2 out of 6. So that's how the strike rate works. So let me take a calculator. If you would take the 2 out of 6, that is about a 30% strike rate on their side as compared to a 50% strike rate on the side. But essentially, we're trading the same thing. It's just that I'm not going down to the 1 minute for the refinement, but they are. Now, I have certainly done that in the past, and I might do that in the future again. But as of now, it is a very comfortable thing for me to do with just 1:2. And the reason why I picked 1:2, I mean, I ran through the numbers, I backtested every single risk to reward variation, and 1:2 is the best risk to reward suited for my personality because I don't do well in drawdown. So by minimizing drawdown, I tend to do better. Now, some may tend to ask me why you don't want to go for 1:3. Now, if you were to look at the law of big numbers, the risk to reward is correlated to your drawdown as well as a strike rate. So I feel that 1:2 is the right spot for that, like at the current moment. Now, I've tried 1:1 in the past as well, and it just doesn't work for me because with 1:1, you have to be very sharp based on your trading, while 1:2 gives you a bit more room for like errors that you make once in a while. Like let's say for 1:1, right? On Monday, you are not really so sharp, and then you take a loss on London Open or something, and then on Tuesday, you come back, you take a loss that is part of the plan. So now you're already down 2R. And then on Wednesday, you take a winner, that is 1R. But overall, you're still down 1R because of the mistake that you made on Monday. But if let's say we were to look at 1:2, the same thing happened. On Monday, you took a 1R loss, and then on Tuesday, you took a 1R loss based on your plan. But on Wednesday, you quickly make a winner. Because of the risk to reward, you're now at break even. And that is much easier for me to deal with as a trader as compared to having to deal with drawdown as well. So yeah, that's the part about my risk to reward. Yeah, which is quite surprising, right, for smart money concepts.
Yeah.
Like given the like you know how it goes. Like we see people on Twitter or even Instagram, they constantly post about the 1:20, 1:40. Yeah.
I mean, do you like look back at your trades at the end of the week, for example, and go, well, that one did go 1-5 or 1-10 or whatever it is, and how do you feel about that?
Oh, I do look at my charts at the end of every day. I have this thing called daily recap, which I do it at the end of every New York session. Now, I mean, that happens. Obviously, if you see a trade run to 1:10, 1:15, you obviously look at it and be like, oh, wow, I could have catch that. But the opposite could have happened as well. The trade could have run like Tokyo and everything else. So yeah, you have to constantly remind yourself of the flip side of that. And because I am there's a scalper here, right? And there's a day trader. So I'm like in the middle. I like to hold trades for about 2 to 3 hours. So yeah, I like to be in and out of the market quick. I like to be very focused in a part of the day, and then I just get it over and done with. I don't like to spend too much time dwelling in the markets. So yeah, I'm glad that I'm in a stage of the market where I don't really care what it does. Like I've already done my job. Let's say the market tanks, right? I just need to capture this specific part of the market, and I'm happy. I'm done for the day because capturing the whole move is not me, because I know that at the end of the day I'll be here in the charts again tomorrow, and I can do the same thing easily.
And when you're doing the multi-timeframe analysis, what timeframes are you focusing on? Now,
this is quite ironic for day traders / scalper, but I spend quite a great deal of time looking at the daily time frame, because I feel that the daily time frame is where I can get my bias from, and establishing my bias is the most important thing in my trading, because without a bias, you don't have a direction. Without a direction, it's very hard for you to pinpoint where the market is trying to go, and then it is very hard for you to come up with trading ideas. I mean, yes, as traders, we're supposed to react, we're supposed to anticipate and wait for things to happen. But based on the clues that you can see in the market at the moment, based on the charts, you can still make a reasonable guess on where the market is going, based on statistics. I mean, let me give you an example. If you were to look at the daily time frame and the past few candles has been bullish, it is a very logical answer to say that for the next day, the market is going to be bullish as well, right? exactly. So that's what I primarily do on the daily time frame, and that's where I spend the most amount of time, and the 4 hours time frame as well. But I'll share with you later why I spend most of the time on a daily time frame.
And I suppose the thing is, like, even as you say, the last few days have been bullish. The next one may be a bullish day, but it might not close bullish. So you might get your move, and then it turns into a bear. But you're still right to go with the bull on that day. Now, I see on your Twitter, you did do one. You've had the odd day where you've sat through 8 hours of price action with no trades at all. How do you manage that from a psychological mindset point of view? That you walk away at the end of the 8 hours and you go, no trades today.
Okay, so this is quite interesting because I was talking to my friend on that particular day about it. Like, we're talking about how being a trader is not too different from being a fisherman. Now, the act of trading itself, it doesn't mean that you have to place a trade. Like, you can look at the screen for a few hours and not place a trade, and you're still a trader, just like a fisherman. If, let's say, the same situation happened, you stay at the river for about 8 hours, and you didn't have a catch today, that does not make you not a fisherman. It's the same thing. Just because I sit in front of the screen for 8 hours and there isn't a trade, that does not make me less of a trader. Now, the reason why you think that I might have some psychological issues with that, I think that I have been through that in the past because naturally, if you look at the screen for 8 hours, feelings or emotions such as fear of missing out starts to kick in, and then you try to look at it and then like what could I have done? Is there any way that I can jump in? Now, because of my heavily tested and proven plan, I know that if I were to get into areas that does not really fit my plan, I know that it will ruin my profits. And because I am a very goal-driven person, I know that by doing this will happen. So if price does not come back to me, there's no reason for me to trade. And I don't really feel anything bad about that because that is just the ebb and flow of the market. If it moves, it moves. If it doesn't come back to me, I'm fine with it. I've really made peace with it.
And now you mentioned, you talked earlier on about placing limit orders, so that's your entry point.
Yes.
Now, I know full well that limit orders sometimes don't quite get hit. You might miss it by half a pip, something as small as that, or then you've got to make that decision as to when to delete the limit order. It's no longer valid. So how do you manage those two elements?
Oh yeah, when I was trading on the 1 minute, yeah, that happened a lot of times. So I set my limit order, and then price would just miss it by. I remember the lowest it ever missed. It was exactly 0.1 pips, and I remember just freezing in the moment. I was just looking at it like, okay, what do I do now? Now I've come up with a very specific way of dealing with it. If let's say price misses the limit order, right, I'll just leave it. Like, there will be a trade entry that I'll just leave it. I'll just say that. I'll just type it in my journal that I missed it, and then I'll look at price on the higher time frames. And then if price leaves the support or resistance that I marked earlier, if it leaves it for a sufficient amount of time, for let's say 20 to 30 pips, that trade idea is no longer valid. And then I'll be looking for a further pullback later because I'm a continuation trader.
Okay. And so, but you haven't put a rule in that, like, if it does miss it by, let's say, 1 pip, that you try and get into that move. You just don't get into it. That's it. You're done.
Yes, I just don't get to it.
Okay.
That's the best way to do it because, you think about it, if you were to look at how you can get it, you'll be very messy. It's very it's just not very mechanical because I've already set in place certain set of rules just to enter at this particular price. And if it doesn't enter at this price, by doing that, it's not really much. I mean, yeah, some can argue that you can just enter anywhere around the area, but by doing that, you are triggering a series of actions that you might unfold on yourself. Like, for example, you'll be like, okay, if price miss this, is price going to hit fill me out at a higher price, or should I wait for price to go higher or lower? And then by doing this set of things, you might eventually over risk and then even lose the trade setup itself. These are certain things that has happened in the past that has allowed me to come to this decision that price either fills me out or not. And because that has happened to me way too much in the past, I have also made it a very generous decision for my area of trading to be very big. So let's say within a very big area of support resistance, I'll just mark it at the entry. So it becomes easier for price to fill me in as compared to worrying about problems like me not getting into a trade.
So what markets do you trade?
Oh, okay. This is very, very important. Now I only trade euro dollar, just one pair only. I do not trade anything else. And that is one of the things that benefited by trading the most. Okay, for about the first 1.5 years of my trading, I was looking at 5 pair. Yeah, that's pretty crazy. I was looking at GBP JPY, GBP USD, Euro dollar, and then I was even looking at gold. And then I was looking at this odd pair, which I traded for quite a while, is the Swiss yen. Now, the problem with looking at all these pairs, right? I mean, yeah, it does work. You can just trade one pattern on every single pair. But the thing is, you're not able to focus on what is happening in the market every single day as compared to trading one pair. For now, if you were to just trade only euro dollar, right, you're able to look at it every single day, and then eventually you are able to spot some patterns that happen on a daily basis. And then you can even look at how the market changes on a weekly cycle. Like, for example, on euro dollar, there tends to be a I wouldn't call it a reversal. I would call it a retracement. But yeah, on Wednesdays or Thursdays, there's usually a retracement. And on Monday to Wednesday, that is usually when the initial push happens. So yeah, if you are just trading like 5 pairs, you're not really able to tell all these sort of things. These sort of patterns or how the market moves, you can only tell like how it really works by looking at just one pair every single day. So that's the advantage of just trading one pair.
And do you think you'll expand that like later on in your career, or have you got plans to? Just happy to stick with, yeah. Okay.
I'm very, very happy to just stay at one pair.
Yeah. And what about, because the reason I asked that question was around whether or not you think missing, say for example, your limit order misses a good trade, but then gets the next one, which was a loss, and then misses the next one, which was a good trade, gets the next one, was a loss. Have you ever had that scenario, or is this something that ever crossed your mind around, you know, the limit order trading not being able to fulfill what the opportunities that come your way for your strategy?
Yes, that has happened to me quite frequently in the past. But like what I mentioned previously, because now I enter with quite a generous, like a space of an area of value, right? So the probability of that happening is quite low. Like the probability of price missing me out on a winner is still quite high. But if you were to put the situation where price miss me out here, and then miss me out here, and then it fills me out on a loser, that is quite rare of a situation. I mean, it still can happen. But based on the past 2 to 3 months of live trading, that hasn't happened for me so far.
Yeah, because I suppose it can. I mean, it's a 50-50 in terms of you get the benefits of focusing on one market, but then you only get the opportunities of that market, which is a trade-off. And I suppose you got to do what works. Now, what about your win rate on EU?
Currently, it depends on the week. On better weeks, it's about 70%. And it can go up to about, I think, 75%. But the average or what I get for most of the weeks is about 60 or 65%.
And taking yourself back to like when you sort of got to done your final course, you're implementing it, and you've got your new process, you're focusing on the one market. That transition between like not, I think you said you had a 20% drawdown at one point, and then now you're sort of consistently being able to grow it. Was there a point where you were like I think I've got it? Was there like an aha moment, or did it just sort of naturally happen and you're like, oh, damn, I'm actually turning this account over?
Yeah, I feel that there wasn't really a aha moment. Like I just tell myself like I have to keep going. Like I already went so far. It's naturally easier for me to just move forward. Like if you were to look backwards, I already spent a lot of time in this. So I just keep telling myself, just take it one day at a time, and then eventually you get far.
And you've talked about the fact that, one of the keys to your success was moving from probably more of a discretionary kind of trading style to a very mechanical trading style.
Yes.
Albeit with like some minor bits of discretion in there. What helps you stick to this mechanical style so that you don't make mistakes?
Now, to understand why I do this, because if you were to look at like how our minds work, and it's kind of part of our psychology as well, right? So like when you are less mechanical, you have to make more decisions. Now, what happens when you're in the markets? You tend to be more emotional, and your decision making it tends to go down. So when you pair these two things together, it's essentially a disaster. When you're emotional, you have to make decisions, and they have an inversely correlated relationship. Like what I was saying, like when your emotions are up, your ability to make decisions tend to go down. So this will affect your trading as well if you're just trading 70 to 80% discretionary trading. But if let's say you're mechanical, you're emotional, but you still stick to your rules and you still replicate them, the effect on your trading is much lesser. And that has been, this is very hard for many viewers to understand, but for those like more experienced traders out there, you will know what I'm talking about. Like this is something that you have to experience it firsthand before you can understand what is going on. Which is why even if let's say you are a highly discretion trader, you will have to go through just like a maximum of 2 to 3 trades a day, because taking a trade itself, regardless of a win or loss, it is an emotional decision. When you make this decision, your decision making ability is affected by the emotions that you are experiencing in the market. Now, if you tell me that you don't have any emotions or you suppress them, I mean, yeah, you can do that for the short term, but over a certain period of time, it is very unsustainable. And then eventually you hit a point whereby all the emotions will just come at you at one go at a certain point in the market. Like, for example, you are a very, very discretionary trader, and then you just had you had a good run for about 2 to 3 weeks, right? And then up to this certain point in a market on, let's say, FOMC, and then that particular day you forget to put your stops to break even before the FOMC event, and then it just took you out, and then eventually it went back to your price, and then it hit take profit, and then because of this event, it caused you to be rather emotional, and then the next day you'll be thinking to yourself, okay, what if I don't use a stop loss? Like I just use an imaginary stop loss, and then I just like control what happens, and then the next day shit happens. You put on a trade, you set your imaginary stop loss here. Basically, you tell yourself you want to get out here, and then the price comes back to your price, and it just continues. And then because of the pre-existing thought of the FOMC event that happened on the day before, we keep telling ourselves, okay, this might recover, this might recover, this might recover. And then this deadly cycle will just happen over and over again. It's part of a boom and bust cycle, which I really want to avoid because I have been in this situation like in the past. So because of these lessons, or rather emotional, I wouldn't say it is, okay, I'll just coin it as an emotional event, because when our brain, like when an emotional event happens to our brain, we tend to remember it, and it's more significant in our memory, which is why it's kind of like a compelling reason for me to like stick to my plan, because I know that if I were to not follow my plan, I am exposing and I'm vulnerable to these problems that, okay, it's not the market, it's me.
Yeah.
What I'm scared of is myself. So all these sort of things is to prevent myself from descending into the chaos of the problems that I will face if I do not become more mechanical.
And how does the plan sort of manifest itself? Is it just all in your head, or have you got a checklist, or do you write things down as they're coming up? How does it look?
it can't be all in my head because as a trader, you're so overwhelmed, right? And if it's just all in your head, right, it really will. It just doesn't work. Yeah, I have a sort of a checklist, and what I primarily have is my trading plan on Notion, and I also have a physical book where I have a flow chart. It's literally a flow chart. So it's like if X happens, then Y happens. It's kind of like an arrow. And then if this happens, okay, let's say this particular situation happens, right? And then there are a few possibilities for it. I accounted for every single possibility. So if let's say I were to face with a certain situation in the market, I don't really have to depend on my memory. I just open up the book and I just look at it. Okay, this happened, so this will happen. So yeah, that is basically what I do. And I've gotten to the point whereby I don't even need to refer to my book or trading plan anymore. Like it just comes to me. It's really like subconsciously registered in my mind that if this happens, this will happen. It's very simple. There's no arguing about this because the market won't lie to you. The price doesn't lie to you. If the candle has been printed, it's there. There's no nuance about it. There's no like arguing about it. Like this isn't arts. This isn't anything. This is the markets.
Okay, that makes it. But back in the day, did you have to sort of religiously maybe tick off things in your flowchart? Yes, that's happened. Tick. Or was it like, yep, I can say that's happened? Did you ever get lost as to where in the flowchart you were? Anything like that?
No, the flowchart is very specific. It's not that long-winded. I keep it very simple and concise. So I don't allow myself to get lost in that. Okay, before this, the whole idea of the flowchart happened, I used to have a trading checklist. Okay, I don't know if you've heard of this trader called Tom Dante. Yeah,
yes,
he was a very famous prop trader. So I was looking through his Twitter and he had this thing called, it's kind of like a piece of paper where you write down your expectations and everything for the day. And then I had that similar idea. Okay, what if I were to have a trading checklist for every single trade? And then I would say at the start of the year or around February or March, I literally had a piece of paper and then I write down a series of criteria that had to happen before I took a trade. So yeah, that was what started the whole idea of the flowchart. Like before that, it wasn't a flowchart. Before that, it was a certain series of criteria that I have to tick every single one of them before I can put on the trade. And then eventually I realized that it works, but it can be better. Like I can do something more specific. It was why the idea of the flowchart came up. And it's a really very systematic way of thinking. And also, and apart from doing this for my trading, I also do this for my journaling. Like I write out a series of things and then I try to like point to myself, like what can I do? What is the best action I can take from here and everything else? So yeah.
And how do you do your journaling? What format does that take?
Okay, my trading journal itself, right, is on Notion. It's basically just a copy paste of TradingView, like the picture of the trade, all the time frames, and then I just type the information, what time did I enter, how long was it, etc., etc. And then I have this section on psychology. Is there any emotions that I felt during the trade that was something for me to notice? Like for example, when I was putting on this particular trade, like when I was putting on the order for this particular trade yesterday, I felt a bit of hesitancy, which I do not usually feel when I put on a limit order. I mean, it is very rare for you to feel emotions for something when you're placing an order that is not even a market order. So yeah, that was off to me. So I noted that in my journal. And then eventually I made a discretionary decision to remove the order from the market. And that eventually saved me a loss. Now, that is not just a very random thing that I do, or because, this happened, then I just remove the order. That is not just it. This was because of my trading journal. Because in the past, I've experienced this as well. When I was putting on a trade, I noticed feelings of hesitancy, and I was just feeling very doubtful, which is quite rare. And that has been a pattern with some of the losses as well. So by observing these patterns in my trading journal, I can now apply that to my future trades by looking at a trade. And then you think about, is there any emotion that you are feeling right now? Okay, you're not to run away from the emotion, but you have to like understand your emotion, because you have to understand that your mind works in a very odd way. More often not, it's trying to help you, and by understanding your emotions and your psychology, right, you're kind of like finding a bridge, kind of like building a pathway for you to like listen to your subconscious mind. Like, you remember me talking about how I was feeling uncomfortable, like doubtful. So yeah, I would just coin it as like a gut feeling. But that was the gut feeling itself, right? It was built on experiences that I had in the market. And because I have like journaled it, I have tried to kind of look into the insights of it. I have now established a neural path for that to happen. And then it's just easy for me to make that connection in my mind, for me to make a certain decision. So yeah, I would say, if you are a very lazy trader, which you're not supposed to be, if you want to get successful in the market. But the most important thing I will have to share with you is to note the emotions that you are feeling when you're taking a certain trade. So let's say you're really lazy, right? When you put on a trade and then you feel certain emotions, just take your notebook, write the time and date of the trade, and then you write down what you're experiencing right now. Because looking back at it, a few months later, it's going to do a lot for your trading, because these are the patterns that you have in your own trading. I mean, sure, analyzing the market is important, like finding the pattern is important, but more importantly, you have to like look at yourself, look at your trading, and then like find the patterns in your trading, and then like look at what's really wrong and what works and what doesn't work for you.
Now, what about your typical trading day, and do you have any sort of like, I suppose, mindset kind of routines that you go through before you step into the front of the chart?
Okay, so there is a certain list of things that I have to do. Okay, because I have a to-do list, right? And I have to do this certain set of things before I am allowed to even open the charts. First thing I have to do is to meditate in the morning. And then most of the time I have to get a workout in. And then I have to get very, very, very hydrated. Now, in terms of mindset, it isn't much after the meditation, because when you are meditating, right, it is not just about like breathing exercise or whatever. The whole concept of meditation is to allow yourself to be more present. So when you're present, like, you are able to make better decisions in the market. And one of the mindsets that I really think about is thinking like a stoic. So when you're putting on a trade, you immediately think about it going to take profit, and then you immediately think about it going to stop loss. So you like kind of imagine both sides of the event. By doing this, you are conditioning your mind to both the loss and the win. And then eventually, I wouldn't say you're numb to the feeling, but you kind of treat it like a business. It's really like a probability thing. You tell yourself that mathematically speaking, based on your strike rate, there is, let's say, a 50 or 60% chance that price will hit take profit. And then there's a 40 or 50% chance that will hit your stop loss. So you really have to look at it. Now, I would call this visualization. Visualization is completely different from imagination, because when you are imagining, you are in the future and it's full of fantasy. But visualizing, you're looking at what can happen now and then. So yes, there's a difference between now and the future as well. I mean, there's also the past, which I don't really talk about. But yes, the whole idea of the mindset, right, is to stay present. Like, you really have to be present. And then it has been, to be honest with you, increasingly hard in this day and day with things like social media and everything else. Like, you scroll through TikTok videos for like 15 seconds, and then the next thing comes up, and that your attention span is just really short. So it is really, really very important for you to be able to stay focused and stay present. Because once you condition your mind to this, during your trading session, you are able to make decisions based on the present and not like dwell on the past or anything else. Like, based on what you are seeing. Like what I've said previously, the charts don't lie. Once the candle is there, it's there. It doesn't change. I still remember this incident where there was a certain news event, and then I was like looking at the chart. I was like, is this candle even real? Like, is there any chance that this candle has been replicated or anything else? And that was quite funny. But that was very, very early on in my trading.
Right. It was just such an odd candle that you just were like, what
yeah,
is
I was
that?
like, is this even real?
Right. Okay. What about the meditation that you do? Is there any specific thing that you follow to do the meditation?
Yes. It is a free app that I can recommend to our viewers. It's called Insight Timer.
Oh, okay, right. Interesting. We'll get a link to that in the show notes. Now, we're going to jump into the quickfire round here. So to start off with, how long did it take you to go from newbie to consistently profitable?
2 years.
What's your favorite entry setup?
Limit orders.
What?
Continuation setups.
What strategies do you use to exit or manage trades?
I do this thing called set and forget. So let's say once I get set into a trade, I put my alert on the stop loss, and then I put another alert on the TP, and then just close the screen. That's the best thing that I can do. I mean, some traders, like I would say some only, they look at the trades. They can just look at the trade playing out, but that's not me. I prefer to just set my limit orders and then I just do something else.
Do you have a recommended trading book or resource?
Yes. Okay. I'm not going to recommend books that like a lot of traders like hear about. I'm not going to recommend your typical book like your Trading the Zone, Bulletproof Trader. I want to recommend this book that is, okay, it's quite common, but it's not as popular as Trading the Zone and everything else. It's One Good Trade by SMB Capital.
Okay. I think I've heard of them before. Worthwhile checking it out. Now, what about your preferred broker and trading platform?
IC Markets. I like them because they are very reputable and the customer service is very, very good. I mean, I have no affiliations with them, but the withdrawals are usually processed in less than a day if you were to do it before a certain timing. Yeah.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. And are you MetaTrader or CTrader?
MT5.
MT5. Do you want to walk us through your worst ever trade?
Oh, my worst ever trade was 2 years back in 2020. I remember it was Trump getting COVID, and that was like 12:30 midnight New York timing. And then back then I wasn't really trading with much of a stop loss, so it was a GBP CAD trade. So on a I think $6,000-7,000 account, I took a $2,000 loss because of that particular announcement, and that was the point where I knew I had to use a stop loss. Okay, it's quite weird that you have to learn as a trader that you have to use a stop loss, and then you just don't listen to the advice. That was the one emotional event that eventually stuck in my mind where I know I have to use a stop loss. Like, this isn't going to happen to me ever and ever again.
Yeah. You don't know when the president's going to get COVID.
Exactly.
I mean,
and it's crazy, man.
Can't predict it.
I'm really grateful for the lesson because it happened on a $7,000 account and not a $7 million account.
Now, what about
you know what I mean?
What about if you could leave our listeners with one piece of advice, what would it be?
Now, the one piece of advice is just 3 small bits. Being very mechanical, being consistent, and find a trading setup that you can is easily replicable day in and out. You have to look at it, and it has to look exactly the same, or it has to have elements that present the same thing to you. By doing this, right, I wouldn't guarantee you, but if you were to do this consistently for 6 months, right, you will be profitable. If you're not profitable, then maybe you're doing something else wrongly.
Brilliant. Well, look, we're going to jump in and have a look at a price chart and see what you can do in a minute. But before we wrap up, what's the best way for the traders to get hold of you?
Now, you can just drop me a DM on Twitter at my username, SOBER, ARYAN.
Brilliant. Well, look, guys, if you want to find out more, head over to his Twitter, or what you can do is jump into the tradingnut.com show notes. There'll be a link under the video or in the podcast description, and then you could search for Brian, BRYAN, in the search box on tradingnut.com. Until next time, I wish all my listeners training happiness and success. Rightio, folks, there you have it. Interview done and dusted with Brian. Now, do remember we shot a video after the show where he breaks down what he does on a price chart. So to really understand this, and it is a very, very good video, to really understand what he does and how he gets the higher win rate, lower risk to reward trades, how he finds those and places them and gets in them, then go and check that video out on the Trading Nut YouTube channel or head over to Brian's page on tradingnut.com. Whilst you're over there, if you're looking to automate anything, as I mentioned at the start of the show, and you don't want to learn how to code, you just want to be able to automate what's in your mind, then check out my Robot Builders Club. If it's too much for you, do the free training first over there on tradingnut.com. And when you're ready to join, there is a promo code, but you're going to have to hit me up in the chat window on the Robot Builders Club page for it. Save yourself a bit of money at checkout. All right, folks, enough from me. Have a great trading week, and we'll see you in the next episode.